Good afternoon. This is Tom Alexander. It is Sunday, September 21st. This is the stock market weekend update for the week beginning Monday, September 22nd. And we have a market that is in some stage of a blow off, and that's particularly true in the NDX. Uh, I think we're very close to a short-term top. I say that unequivocally, without hesitation. Could be wrong, but there are a lot of signs here that we should be seeing very, very soon, at least a short-term top. Now, what am I talking about when I say a short-term top? Something greater than 1% that lasts 6 hours. Okay. Uh, I'm not being facetious. I mean, that's about the extent of we've had a few uh, days of balance retracement since the April low, but not many, and they've been extraordinarily shallow. This has been one of the most persistent bids under the stock market that I can recall in my 40 years of trading. And that includes coming off of the COVID low. That includes 1998 into 2000. And by the way, as an aside, I think that's where we are in the market. We're somewhere in 1998 to 2000. I don't know if we're closer to 1998 or we're closer to 2000, but this is analogous to that time frame, somewhere in there. Now, from a trading perspective, I know that's not particularly helpful. From an investment perspective, as someone who does not have 60 more years to live like my children do, I am adjusting my longer term investments accordingly. But from a trader's perspective, which I also am, I think this market will go higher following any short-term correction, but we are certainly due for a short-term correction. Let's take a look at the charts. Okay, we're gonna I'll come back to this. Let's start with this first. All right, here's the profile view. Let me make sure I'm showing what I want to be showing here. Let's see. Yes, I am. Okay. So this is the monthly profile of the SPX. This is where we closed on Friday. Now, I'm not going to get into the weeds with market profile. I'm not going to get into the weeds with auction market concepts, but I will show you. I mean, if you don't have to know anything about auction market concepts, you don't have to know anything about market profile to play the game. What is different about this? So this is the auction. This is the trade. This unit. Okay. This combination of letters is this is September. This is August. This is July. This is June. This is May, and so on. This was April. Now, what's different about this? And we have been in, again, since April, we've been in an extraordinarily bid market that is just almost dead vertical most of the time, including intraday. Since September, I keep thinking the market is going to be more rotational. And we're going to get rotation. I guess what I'm sort of mangling my point here. We're so overdue for rotation in this time frame. What does rotation mean? Well, it means retracement, something that includes retracement and overlap on a day-to-day basis. We don't have any here, hardly any. This is really unusual. So it's sooner rather than later, this thing is going to truncate into a more rotational market on a day-to-day time frame. That's the point I'm trying to make. Okay, let's look at here's another reason that I think we're close to a short-term top. Now, this is nothing magical or fancy or particularly rigorous. All I have done is highlight the swings beginning back in, what is this? Late May. Okay. We had this initial bungee jump off the April low. And then we began this pattern of ramp, short-term decline, ramp, short-term decline, ramp, short-term decline, et cetera. Well, the ramps, the magnitude of the ramps, the greatest magnitude is about 5.67%. Well, off of the early September low, September 1st, we're now up 4.93%. That is the second greatest ramp in magnitude since May. Okay. And if we get to the greatest magnitude, that's less than 1% higher than we are. Okay. So again, there's nothing magical about this. There's nothing set in stone about this. It is just showing the relative rate of change this month. And again, I showed the profile view is extraordinary. And I would not be betting a lot of money that is going to go up at the rate of change which has been going up since the beginning of this month. Okay, let's take a look at some of the other indices now. Where's the NDX? All right, I put this chart in the report. By the way, if you go to alexandertrading.com, click on weekly update, this report is there in written form. You can download a PDF, and you can go back and you can look at previous reports that I've done. Again, it's free, alexandertrading.com, click on weekly update, and there's a ton of stuff there. Okay, so the NDX is up not quite 50% since the end of April, 6 months. Again, I don't know. This is a blow off. Now, can the blow off continue? Yes, it can. But this is a blow off for sure. That's the NDX. This is weekly NDX. Let's go to the Russell. Now, the Russell is interesting because it's bumping up against a double top. Now, would be a triple top. This actually is quite bullish in my mind, intermediate term. If the Russell manages, and I don't think the Russell is about to break out above this level immediately because it's so extended short term. I think it's due, like everything else, to come in some. But this is a really important level. And if and when the Russell does close above this level, it has to be respected. I don't think that's going to be now. And if it does close above it short term, I don't think it will stick before it retraces and tests something down in here in these lower levels. New York Composite. Now, the New York Composite is in a little bit of a balance area. This is a minor divergence against the NDX and SPX, as is the equal weight S&P, similar picture here. The Dow, I don't think I showed the Dow. Here's the Dow. Here's the Dow weekly. So everything looks great from a price action perspective. Under the hood a little bit, one thing that concerns me, among the things that concern me short term, this is VIX. VIX has actually increased during this ramp. In the September ramp, VIX has overall increased. That's unusual, and it very often is a precursor for a top of some, at least short-term duration. And then if we look at breadth, now I've warned about leaning on this too heavily. There's a divergence. Of course, we've had a divergence in breadth now almost since May, and the market has continued higher, which is typical in a bull trend. This is information that is far more helpful in downtrends and identifying lows than it is identifying tops. However, this is extreme. This is a divergence of very significant magnitude, and coupled with everything else, I think it adds to the weight of the evidence that we're close to some sort of short-term top, at least a short-term top. I don't think it'll be any more than a short-term top. Even if the magnitude is sharp, even if we go down 7, 8, 9, 10%, I do think we will see new bull market highs sooner rather than later, and very likely this year. So guys, that's where we are. Do me a favor, if you find value in this, I'd very much appreciate it if you would subscribe, like, make comments, all of these things that drive the algo and increase views to my channel on YouTube. I'm trying to grow it. I have a lot of stuff coming down the pike. You guys take care. I'll speak with you again very soon.